Hey, good morning. Let's see, we got Keaton, Spinborn, David, Cliff, Dawn, Be Like Water, Amy, Dan. I'm skipping around like crazy. John, Goose, Darren, Will, Ed, Chris. Welcome everybody. S. Kohler, Ed, Ivan, Jason. Good morning, everybody. Good morning, channel members. Especially glad to have everybody here. And if you're new here, welcome to the show. My goodness, not as bad as feared. The economy adds 151,000 jobs, and I do apologize. Yesterday, I didn't say anything, but the curse of the red monster took us lower once again, and it was the last monster in the fridge. I don't know, like it really messes with my mind. Is it the red monster? Is it just subconsciously I plan the red monster for the down day? I don't know. Like it's so weird. It really messes with me. Every day I drink a red monster, down day. You can go check the video from yesterday. Red monster sitting on the table. And I don't know. Anyway, um I don't know. It's just that's a whole nother level of weird. Anyway, curse of the red monster. So this morning, look at that little volatility right there. That is the jobs report, that candle right there. That high, that low. It is a higher low than this one right there so far. Ah, it's my fault. Yeah. I mean, whose fault is it? I don't know. It's all the seller's fault, right? Everybody's freaking out. Everybody's, oh my gosh, the sky is falling. Blah, blah, blah. The jobs report is out. We added some jobs instead of losing a bunch of jobs, but it's not all rosy, I guess. I mean, I don't know. I don't know. I mean, we've got the here we go. Non-farm payroll monthly change added. We haven't really been negative for a couple years, 3 years looking back. So growing, right? Growing. Positive. And I guess this one might be more telling. Right there. That's not great. Not great. U.S. employees on non-farm payrolls, total month-over-month net change. The net change was negative. Not growing is, in other words, growth is slowing down. That's why the volatility. And then, see if I can find the other chart I was going to show. Here we go. This is the one I was trying to pull up. Full-time versus part-time. Look how many, like we lost 1 million full-time jobs and added part-time jobs. That's not great. Not great. Losing those full-time jobs, that's a problem. This has been going on for a while. Losing full-time jobs and getting part-time jobs. So yeah. And then looking at manufacturing jobs, actually increasing slightly, slight tick up. That's pretty good. I mean, pretty good. And I've got all these on different. It's like, why don't I have? And yeah, that was the last one I had. I guess this is the bisector right here. You can see we lost. What is that? I can't tell the colors on this. Yeah, pick a bunch of colors that like look all the same when you make a chart like this, right? Brilliant. So it looks like the big winner, actually, education and health services. Like education, and health services. Why that all goes together as a sector, I don't know. But hey, I didn't make the chart. Looks like manufacturing had a 10. I guess leisure and hospitality was down. Yeah, that's negative 16. So that was a negative. It's like, where did the jobs come from? There you go. So, 151,000. We have 5,000 in IT, 4,000 other services, 5,000 in mining and logging, 21,000 in financial activities. 11,000. We added 11,000 jobs in government, despite all the Doge cuts, and that blows my mind a little bit, right there. The FHA loans, like if which is a lower end buyer on the market. If you get a Federal Housing Administration FHA loan, FHA loans delinquencies are up to 15% this week. I mean, but hey, we added jobs, so it's good, right? It's good. It's good. It's good. It's good. I don't know. Market doesn't know either. That's what we're seeing here. We're pushing lower. Probably gonna go lower low. Down in the weeds. It looked like we got a nice bounce yesterday. Like this. And like right here, this looked 1, 2, 3, 4, 5. But then we did a 1, 2, 3, 4, 5. 5 up, 5 down. That's what the heck. That muddies up. Down's the direction until we hit the target, which at this point we're probably, hate to say it, but we're probably going to fill this gap right here. Now, down on a Friday, probably going to take this into next week, potentially, unless we fill this gap and reverse it. I think we're probably going to fill that gap. With the weakness we've got, poking through this July high support zone. If we do that, we're probably going to go fill that gap. It's been hanging there. Probably what we're going to do. Now, if it doesn't hold support, if it doesn't turn there, that's the target right there. But I'm not sold. Like there's a large support at 56 right there. Why? Because of that, we do typically get overlap when we do what we're doing in the market right now, which is kind of a leading diagonal or a diagonal of some sort. So it would not surprise me to see that kind of overlap there with that high. And then we go ripping off to a new high. Wouldn't surprise me. Wouldn't surprise me. All right. Moving on. Let's look at what else we got going on. All trading involves a substantial risk of loss. If you're doing this thing we call trading, you may lose money. It's a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them because there's substantial risk of loss when you trade them. And if you desire somebody to tell you what to do, that's not what I'm doing. I'm not trying to tell you how to manage your own money. If you want to blow it all on crypto, go ahead, be my guest. Speaking of crypto, we have the Crypto Summit coming up today. Dun, 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 dun. Allegedly, Trump signed. I have trouble picking up on real news versus crap news. I think Trump was signing an executive order for the authorization of the Bitcoin Strategic Reserve, as they call it, Crypto Strategic Reserve, as they've been referring to it. And I think that happened yesterday late, but I'm not 100% sure if that was real or not, because last time when they were reporting that all over the news, it just created a committee to evaluate doing that. There is the Crypto Summit coming up this afternoon, whenever it is. I don't know. Trump planning to speak at 3 p.m. So crypto could go nuts or it could plummet in the toilet. This one, I'm not sure what he's going to say. If he goes more soft on the rates, like, hey, we may need to do some extraordinary measures as we come to the end of the debt ceiling, whatever. I don't know. We may need to loosen. We're seeing two other major central banks add extraordinary measures to add liquidity to the market. Think about it. The only thing I've ever found that's 98% correlated to the U.S. markets going up is global liquidity going up. So if two of the other major central banks in the world, two of the largest ones beyond the United States, are adding extraordinary measures to add liquidity to the market, think about it. That can be the catalyst that fits with the seasonality, and we go higher. Yesterday I said 4 to 9 days left, potentially in the seasonality correction. We're ticking on down 3 to 8, potentially at this point. See what happens. If we can survive it, seasonality wise, this may turn. So we've got these events today. Looking into the future, roll back up, check out next week. Monday, benign. Tuesday, JOLTS jobs openings. Not really maybe that may cause some volatility, but I don't really expect it to do much. We do get CPI, so that's inflation. That's probably a market mover on Wednesday next week. And then we'll get PPI on Thursday. And then we should get the retail sales, but we didn't. Where's the retail sales? I guess they're going to punt that one to the next week. Retail sales usually on Friday after CPI, PPI. Interesting. Unless they forgot to put it on here. And then the following week, there's retail sales Monday. That's weird. Wonder why that's on Monday. That's weird. Weird. Anyway, this right there, Wednesday the 19th. So not next Wednesday, but the Wednesday after that. FOMC meeting with the potential rate change announcements. Are they going to cut a rate? Are they going to keep it the same? We'll talk about that more as we get closer, but that is on the calendar. And you know what's funny is that fits. Hey, take 8 more days, add it to the day. That makes it the 15th. That's right in front of that day right there. Maybe we extend this out a little bit. Make it, 12 more days of this choppy crap. And then the FOMC is the reason we start moving. So, be careful. That's what I would say there. Be careful. We don't have a bottom till we have a bottom. All we can do is look and see what we got cooking. All right. Everybody cool? Everybody know what we got coming up for the foreseeable future? And remember, President Trump speaking every day, volatility. I mean, you never know what kind of half-baked, full-baked plan. And the thing is, he's a master negotiator. So he's going to say whatever he wants to say to try to convince everybody something's going to happen so that he can get what he wants out of the negotiation. It's like the art of the deal. I don't know why so many people don't realize this. He says all this stuff, but it's really just to get people to do what he wants them to do. It's like the whole thing, like we're gonna buy Gaza and develop it. He only said that to try to get somebody else to come to the table and decide to redevelop Gaza. I mean, come on. After all the years of listening to Trump, I've kind of got it down, but it's going to cause volatility because people just take him at his word. I don't know why. I mean, it's kind of stupid to do that, honestly, but that's what people do. That's what the market loves to do. Take him at his word. So he says things to try to get whatever conditions to happen. Like, I'm firm on these tariffs. I'm not backing down. And then tariff day, and well, all the stuff we've agreed that we won't tariff, we're not going to tariff. We'll punt a month on auto tariffs. And I mean, it's like, it's all about the freaking negotiation. Like, you can't, I mean, if you're trying to negotiate, you can't be like, hey, go tell them that we're not really serious about this. You can't leak it out. Hey, all right, as a country, I mean, all their countries watch our news. You can't be like, hey, American people, I'm not really serious about putting tariffs on, but I'm going to say we're serious about it so that the Canadians think we're going to, or so the Mexicans think or so that China thinks. I mean, you can't do it that way. You got to be like, I'm serious. And everybody believes you're serious. And then, you can back down. I mean, yeah. It brings people to the negotiation table. I mean, so, I mean, I'm not trying to be political. I'm just saying that's how you negotiate. You don't tell the other side that you're willing to make sacrifices until it's time. Otherwise, they walk all over you. And that's kind of what we've seen. But it does add volatility to our markets because he goes about it differently than we're used to. So, anyway, let's look at the market to see how we can make some money today. S&P starting out down a little bit, but it's not lower. Not yet. This is the chart to watch for the lower low. If we get that lower low today, there's potential that we carry this into Monday, Tuesday, Wednesday next week. Potential. That July high is important. Right there. If we can maintain above it, that's solid. You look at where the other candle closes are, though. It's kind of like right there. So there's a zone of support. That's a big fat zone, but there's a zone that we may dip into right there if we're going to break on down. The S&P high from July is, excuse me, that blue monster talking to me today. That July high on S&P 500, the cash index, is significantly lower than where it is on the futures. Now, the futures did leave a gap, so we may, in fact, and this can happen when the market's closed. We may see this gap fill before we can rock and roll. That could happen Sunday night. We can just screw around here today, not make a lower low, that pop down Sunday night, then rip back. And I mean, there's all sorts of possibility here. All sorts of possibility. We're hunting a bottom. All right. It's, I can't say which dip's going to be the last dip. I mean, we might rip today. We break back above the last 3 days. We get back up here above. It's a big move. We're talking 150 point up. But we break back above these candles from the last couple days. Right there. These guys, these two. Get back above that. We're probably done down here. That's probably the bottom. Probably going up. All right, that's what to watch. That's what to watch. Now, Bitcoin coming in the open here, kind of flat. So Bitcoin not really telling us much. Not really telling us much at all. Now, let's go check in here. This is our giant market oscillator. What do we expect? You know what? Look. We're in the vicinity of bottoming. All right. S5TW, stocks above their 20-day moving average, indicating we might be in a place where we can bottom out in the market. +1 for potentially making a bottom. Is there potentially lower to go? Yes. Could we go on down? Yes. Potential. But we're in the vicinity of where we do these bottoms when we haven't made an epic, huge higher high. See right here, we just poked above 20. We just poked above 20 for one day. I think we need to go, or, you know, when I say 20, that's 20% of the S&P 500 stocks below their moving average. I think we need to go up there above 90, which is 10% below. I think we need to go up there above 90 before we get the bigger down back to the bottom. Need to make that bigger move up there above 90. So potentially going to bottom out here. S5 FI. We are down to the point where we bottomed out back in early February. We're lower than we've been on reversals for a while. We look back there. This one has been at the bottom more recently. We haven't been to the top. So this one also indicates that this may be an intermediate retrace before we go on the path up to the top. That's 2. That's 2 for going higher. This one, stocks above their 200-day, still leaves room to the downside. So bigger picture, I think we're still in for weakness. But short term, these are short term. This is longer term. Short term, we can go back, we can rally. So there you go. Short term, we can rally. Bigger picture, we may still be hunting a bottom. And potentially we make another one of these lows here, a higher low, and go on out and make a new higher high up here later this year. That'll be interesting. So looking at the S&P 500 futures, diving down, checking it out. I don't know. That's not really indicative that we're done yet. We're still holding that. You know, I told you the 15-minute roadmap line was important yesterday. Well, now the 5 minutes. So this is downward pressure. Like, even on that volatility from the jobs report, couldn't get a close above the 5-minute roadmap line. Pushing down to lows from yesterday afternoon, potentially going to make a lower low, and we'll see. So the 15 minutes, you can see we tagged it with that spike and rejected hard. Tagged it yesterday, tagged it over here. We've just not been able to get above that 15-minute. Once we get above the 15-minute, the 30-minute comes into play. And you can see right here, that's where we rejected just 2 days back. Rejected over here, rejected right there. So these all combine together. So you want to know where the reversal starts? Watch the 1 minute. It's way up there at this point. We get above it. Then you can flip up to the 5 minutes and start watching that. You get above it, maintain above it. You know, like that was getting above it. Then we didn't maintain above it. Then further downside. You know, reject it off over here. So that's how you can, how do you know? What do you watch? How do you know? And the cash index, potentially trying to bottom out here. Potentially, we'll see. We made a higher low so far on the cash index. NASDAQ has now this one's interesting. It's been grinding that low from November right there. We're well below the July high. Well below the July high. This November low happens to be right where the August high was when we bounced. That's something to keep an eye on. And we've been absolutely nowhere since June. Feel like the market hadn't gone anywhere. June, right there. Haven't gone anywhere since June. Wow. Feels like the market's been stuck. That's why. Oh, man. Looks like we're going to fully test that right there. Looks like we're going to push that down right to the targets. 2039. We have 1958 below that, but I kind of expect this to bounce back up. Possibly to the roadmap line, possibly to that 618 zone up there. That's the 618 retrace of the drop. And that will pull down a little bit more now that we're down here. And if we do that big retrace at this point, that looks like it's in the right place too for a potential. Remember I said, if you've been watching me the last few days, you know I've been talking about, like, you pull this down to a point where that 618 lines up in the right spot. And then that's kind of the target zone to watch for a reversal, for a bounce, where we might bounce up and find resistance in that spot. Well, that's starting to look like the right spot, especially when you come back and look at, oh, lines up with that, and lines up with that, and lines up with that. Well, now that 618 level right there is starting to look like it's in the right spot. If we find a bottom right there around 2039. Kind of funny how this happens. And then if we rally from there, possibly take ES to new highs, possibly take NQ to new highs. Russell stops right in this vicinity. First move down, retrace. That next move down projection puts us right down in here. Those numbers, 1800, 1700, 15 or 1600, with the bigger potential all the way down here at 1300. For this bigger picture, first move down, retrace, second move down. Kind of interesting, right? Kind of interesting. So we could see this set up as a 1, 2, 3, 4, 5. There you go. There's a big picture, long term, not predicting time. All right. Don't go buy a 2026 or 2027 put yet. It would be way better to wait for this bounce and this potential start of a rollover. And then you could potentially target that area right in there around 1600. Then we'll get a bounce, potentially grab something else, and then target that move down right there. But we got to see where we get to. All right. Do I know we're going to bounce? No, I don't know. We could just drop the soap and fall out of bed and fall off the top bunk and roll down here. I don't know for sure. Do I think that's going to happen? No. Oil got close to that low from May 23 and started bouncing. Now this is a pattern that we see often, that uptrend of lows. We break below it, we come back, test it from the bottom, and then we get the bigger flush. That's a danger pattern. Danger, danger, danger. The place I've seen this most recently, let's see if it was on this chart. Yeah, right there. Look. Broke below, retested, and flushing out. On home builders. That's a dangerous. It works the same as the breakout higher, but this is a cautionary breakdown pattern. And we saw this across all these home builders. They broke down, came back, retested that, and flushed on down. Be careful when you see that pattern right there. That's why I draw these uptrend of lows all the time. When you see it break, retest, you've got to watch for the bigger flush. So oil right now has that cautionary setup right there. If you're looking for something you could long while oil goes down, right there. You can buy shares of this. Now this chart looks pretty horrible. Lots of volatility. I'm not saying this is running to new all-time highs or anything like that, but this will go up when oil goes down. Ultra short right there. Caution on this chart. It is a leveraged. Ultra means leveraged short on crude oil. So caution on leverage. Gold holding in there so far. It's the most boring 3 candles on gold that we've had in a long time. I mean, look. Where is it made 3 little dojis? Right there. So we're going all the way back to November. Last time we had 3 little dojis. They're just side by side by side. I'd love to see this spike up. But I don't know. You know, the November one, we were down 3 dojis and went down. This one, we're up 3 dojis. Can we go up? Maybe. Possibly. So there's the resistance right there at the top of all those candles. That's 4 days, 4 days in a row. Basically, we've had highs right there at 29.40. Potential for a downside down here. And if we break higher, right up to 3,000 would be the potential upside on gold. Bitcoin just keeps frustrating everybody. Waiting for that crypto strategic reserve. And if we break out higher than this high right here, the patterns suggest that we're going to see this rally right back to all-time high, probably consolidate, and then extend it on higher. That's what the pattern suggests. This is a bullish potential setup for a rip. We've nested at 1, 2, 1, 2. We held that 618, pushing higher. Here's the initial. If we break higher than yesterday's high, that's the initial. We're going to break out. Then a couple days back, beginning of March, we break above that high. That's kind of confirmation. Then we get above this area right here at 100,000. Right there. That's even more confirmation. We're going up to at least 108, prior high. Then we may get a retrace. And when we break out above that, it's game on. Now, I don't know for sure we're ever going to get any of those pullbacks. We may just rip this thing and just blast off, depending on what gets said later today during the crypto summit. So, right there. And Ethereum is still sucking it up down here at the bottom and does not look like it is participating whatsoever. I'm not sure this is going to turn higher. I have a big red caution light when I look at this chart right here. Remember what we talked about, the uptrend of lows? Broke down, back tested, flush on down. Potential for this to flush even further down. It's great, but the chart is horrible. This chart is not no bueno, as I would say. It is not looking super good to me. Now, our global, checking in on our measure of global liquidity, we're screwing around here. Maintaining the uptrend of low. And that's not really, we don't really have much uptrend of low cooking there. Extends back to way over here. Gotta draw it properly. I don't even know where that high is. Let's see. Let's pull that back over. Pull that back over where we need it. Wonder if I'm on the wrong. Let's see. Oh, there we go. Here we go. So it depends on which lows you connect. You connect those lows, we're below it. Go for a little different angle here, where we kind of bottom right there. Ignore the big spike. That low, that low, that low. Coming into it, holding. Trend lines are the least reliable of technical analysis because they're so subjective. Where do you put them? Which lows do you connect up? It's hard to be exactly right on the money. It's like, yeah, when you connect up those, see what those candle bodies are, ignore the tails. We're right in there. Now, if I can draw it, that means other software draws it. All right, that's why I kind of pay attention to it. But so if we get below this, watch out. If we break down, back test it, could be setting up a bigger flush global liquidity wise. Target could be down here, and that will take all the US market and everything with it if we do this. If we can bounce here, break back above that resistance we've had since last summer, go up to new highs, potentially 44. Everything's rosy, probably going to make new highs. Dollar continues to push on through. Looking like we might get the bigger flush on the dollar. Right there. All right, I go pull everything moving $2 or more up in the pre-market, put it on the gainers list. We look for opportunities. I go pull everything moving $2 or more down on the decliner and put it on the decliners list. That's down here. And we look for opportunities. I have a juicy potential bonus trade coming up at the end of the list. So stick around or come back, check in later after I'm done. And we'll give the bias for the day before we leave. So, and we'll go look at the chart and identify the exact levels I'm watching for bias for the day. That's what that means. Bias for the day. That right there, nice little pop. Potential that this was the low. This goes ripping off, breaks above that 618, and takes us up to new highs, 262 on AVGO. And there are leverage tickers that you can take advantage of this. Trying to remember. Let's see. There's so many leverage tickers these days. I cannot keep them all in my head what they are. Yeah, there you go. AVGX right there. AVGL. And if you believe we're short, AVS right there. So there you go. There's 3 tickers you could mess around with. Right there. All in the US markets. ASML. As long as we are underneath this roadmap line and keep holding, just like we've held over here and there and there and there and there and there. You get the theme here. That is an important level. How do you make the roadmap line? Well, click on my name right under me here. Go to my channel homepage, watch the video. I tell you exactly the code, the exact EMAs that make up the roadmap line. Hint number 1 is the 144 EMA. And if you just want the easy button, link is in the description below. Just on down below my name, click the more button underneath the video, expand it out, click the link right there, $5. You get an easy button, throw it on your chart. This thing works. I mean, look at that. This has been resistance going higher on ASML, since all the way back here when we broke down in the summer of last year, when the market took a dump in early August, and we have not been able to get back above that yet. And as long as we are under it, I still expect one more dip down to low 600s. If we start getting above it, come up here, back test it from above, like something like that, probably done on the downside. We're not going to hit the 600 and we're going to go higher. But until we do that, until we do this right here, still expect low 600s. Am I trading for it? No. Am I watching for it? Yes. If we hit it, I might add exposure, but until we do something that confirms which way we're going, more of this sideways to slightly lower would be what I expect, and that makes it incredibly difficult to trade this right there. Like, incredibly difficult. So, sideways to lower. That's what I expect. All right. FNGA. That looks like we're coming on down. I wonder what happened. Did that change from FNGU? Yeah. Changed the ticker. Interesting. So FNGU now became FNGA. GE Veranova. Potential roadmap line bounce. Hadn't started to do it yet, though. That 618 looks like it might be in the right spot, but we might need to push on down to this 250 level to pull that 618 on down where it lines up like that. So watch for further decline right there. That would make sense to me if we pulled on down to that 250 area, pulled that 618 level down into that other consolidation, and then come back up, find a little resistance there, and we could go potentially higher on up to 47. CEG. In a bottoming, we're in a point where we can bottom here. If we don't start turning here, we may come on down to this area down here. And if, remember, energy is like a tough market right now. That's what I'd say. Remember, energy is a tough market. Baba looks like we're about to pop this target right here. I've had that target for almost 2 years, I think, since we bottomed way back over here. Almost 3 years now. Yeah, crazy. Now, what happens when we get there? I think we get a big retrace. 210. If we hit 210 straight off, like if we just rip right up to 210, I think we get a big retrace. Come back, back test this zone right here before we can go higher. SMH. Well, remember what I said about breaking down and back testing? Potential for this to flush on down, the 180. ZS, just chopping. This has the potential to come on down to that 618 zone. We have the initial move down. The retrace 618 zone probably sitting right in here somewhere. Oh, I went a little high. Yeah. Wouldn't surprise me there. And yeah, wouldn't surprise me. PKX, POSCO, coming up into that roadmap line resistance. Last time we did that, fell out of the bed. Be careful, we can do that again. AVO, there's AVGO 2x leverage. If we're going to turn it here, that could be a bottom. And let's see, pull that all the way down to the bottom. We got the initial drop, we got the retrace, we got the bigger drop. And so we'll watch for resistance at this zone. Now, leverage charts don't always follow the patterns, but if this is going to work out, this will pop back up, break through this zone right here where we consolidated, get the extension on up into that 46 area right there. So that could be a little better than a double on shares if you're willing to risk it for the biscuit. And maybe stop out below 17. So risk like $3 to potentially make like double your money. 20, 26 bucks. That's a pretty good one right there. I might be willing to take that one with a few shares. AGVX, same situation. Has a little more history there though. It could be telling that we're going to break on down. Similar story. You know, we're at 19, could go up to 43. It's not quite 26. It's what, 24? 24 and a half. And if this one breaks down below, I'm going to go with about 1650 on this one. If we get below that 1650 area, 1640, not looking too good for that bounce. Confirmation above the 28 area, 43 up there, gap. And remember, I'm not telling you to take that trade. I didn't sit here and get into that trade. So it's just an opportunity. Take it if you want, if you like it. If you don't like it, don't take it. Like, that's, you got to make that decision. If that risk is right for you and your money, that's the kind of game you want to play, I may or may not actually get into it. Like, I think I will, but I may or may not. Right there, potential further downside on gap. Banana Republic. I guess it's not Banana Republic. It's banana. Yeah. Anyway, clothing stores. They run a bunch of different brands. Surprised they don't have their brands on here. Banana Republic, Athleta, Gap, Old Navy. TSM. Under the roadmap line, if we break down below these lows from back here late last summer, fall, might come on down to that August low. If we can bounce here, there's the resistance, there's the high. Nothing's changed on this chart in the last couple of days. SOXX, that one crushed it. I would expect this to make a low lower than this low before we can turn this chart. One more spike down before that turns. Just, it's what I expect. ANET is hanging out here in the reversal zone. Potential for that to turn and burn. CLS at the roadmap line. Beautiful retrace. Potential for this to hold here. Turn and break higher. If we don't, we may come back and retest these highs from right back here. See, right, that was that high, gapped up through it. We may come back to retest that at 64 if we let the rope go a little bit more. In CSM, chopping at that roadmap line there. DPST, looks like we need a little further downside on regional banks. NTES, so that turned from being positive to negative. NTES broke through, back tested. If we get through that 618, potentially going higher, 111, 113, 119, and this could rip to much higher levels, potentially all the way up here, maybe even like 180 or 220. But 150 would be a good spot to target if this is going to break higher. BABX, BABX, BABA, 2x leverage long. Be careful on leverage. This may get the extension on up. Possibly 53 up there. All right, decliners, Costco. Oh, look. Man, we might actually hit the roadmap line. We might actually hit the roadmap line. We have not hit the roadmap line in years. It's been back here since 2023, since we've done a roadmap line bounce on Costco. It's time. It is time. Oil, still churning here. That's ultra leveraged natural gas. The NG1 exclamation points. Ooh, I still kind of like, it's going to be, I'll be disappointed if we don't spike that before we drop back, but roadmap line, be where I expect. And then if we get below it, down in here to correct. That's natural gas. Boil, of course, it's a leveraged thing. Oil is, of course, a leveraged natural gas product. So if natural gas falls out of the bed, this one will quickly drop back. And this is a declining asset, so even if gas just chops around, this will drop back down. Lunar. It lost another lander. And somebody said they're probably coming back down. Hate being right. Anybody doubt me? Anybody doubt me? This may come back to the lows. Just warning you. Just saying. Don't like rubbing it in, but I know some people were very bullish and thought I was absolutely wrong on that. And guess what? Guess what? So this one, first move down, second move down, potentially bottomed here on MSTR. Let's just remove a few things and talk about it. Lining up these highs. Depends on which highs you line up, right? Like that high, this high. Which highs are the highs that matter? That's always the toughest thing. I do it based on experience. Like I've watched enough stuff, enough times, and I try to line up as many highs as I can with the line. So here's the resistance, and that's proving to be resistance. So if we break up through, we may come back test it from the breakouts before we can extend it to some higher targets. 600 would be a great place to go if we break higher than that high we had back here early in January at around 400. That's a pretty good upside from down here in these levels at 300. Pretty good level. I bought some MSTX back here. Looking pretty darn good. HPE. Ouch. And Hewlett Packard, probably never going to be the same. I've used a HP calculator since I was probably in 8th grade when I first did algebra stuff. HP 48GX, and this company's never, like HPQ, HPE, it's never gonna be the same again. Like I don't know. They split the company into HPE and HPQ when they combined with Compaq. Neither charts that like unlock the value, but neither chart's been doing much for years, it seems like. I think they messed up that company breaking it apart. But probably messed up that company buying Compaq, but I digress. Diago keeps grinding lower. We may go retest the low from March of 2020. IoT. Samsara. Grinding in here. Nah, man. TI-86. That's HP 48 right there. Ka-chow. I still use it every day. Got a quick button on my phone for it. I loaded the ROM off my desktop calculator and put it on my phone. Anyway, AVS, sucking it up here. UVIX. Yeah, are we done on VIX? Possibly. Watch, that's 4 days. 4 days grind right there. We did a 4-day grind right there, and we popped it a little higher, and then we're doing another 4-day grind. Might be about to come back down. Like I talked about before, I don't know if that was yesterday or the day before. My days are starting to blend together. We go up and look at the bigger picture, long-term thing here. We haven't really made the low like we historically do after we get the spike. So we may grind this on down back into this $10 area, 10-point area on VIX, but that doesn't mean we won't be without spikes and chop. I mean, it's like a kid with a crayon, like scribbling. Like, so this will very violently make its way back down to a low before we get another big spike event is what that, just look at the history. That's what it says to me. We do it over and over. Come down to this low zone before we spike. The average, when you average everything across the whole history of this thing, is around 20. So we're sitting just above the average, but we do typically bottom down around 9 before we get another big giant volatility. So right now we're elevated. We may push on lower before we rip again. Doesn't mean that currently we can't spike, but this is starting to look played out at all these prior highs we've had for the last year or so. Be careful. Now, my bonus trade for the day. Check this one out. This is a really nice looking trade. Really nice looking trade. This quickly in 2 days dropped down to the roadmap line and bounced. Yesterday closed above the 618, activating the trade. I may actually put money on this because this is really nice looking. 73 to 74 upside right there. And the official numbers. Dun, 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 dun. JT, pull up the official numbers. Yes, I will. Just give me 1 second to get that pulled over. Throw it on here. Oh, close the tab that had that. Put it on here. So eBay, new potential target, 73.07. Stop below 60.55. Upside potential of 520 based on yesterday's close, which it's already a little higher today, so be careful. 90% win rate on 21 trades since 1998. It's been pretty reliable. Profit factor 2.8. Usually lasts about 59 trading days. Let's go look at what that means on the chart. And this looks like it may get there faster than the average, but you never know. 59 trading days pulls us out here. Right there. 59 right there. It's 87 calendar days. So that's out to June. And it could last twice as long. Like this could just, based on the history, this is, on average, this is taking about this long to hit it. Sometimes they take twice as long. So it could screw around out here twice as long. So it could be December before we got there. 3 times as long. All right, be careful chasing these. It could be September, could be June, September, December. Doesn't have to just play out as fast as the average. So, everybody cool? Bias for the day. Bias for the day. Bias for the day today. Jump it on down. 5 minutes roadmap line. See, we did that. We popped above. Back tested. Moving up. Potential. Potential. Got to watch the 15-minute. That's where we spiked to. So that's the major resistance right now. That's the resistance in play. 57.80. Watch that. We can get above that. Not just for like 10 minutes. We got to be up there for like an hour. At least. Back test it. Hold above it. If we start getting candle closes below it for an hour, we're probably going back lower. So watch for this. Need 3 or 4 good candle closes up here. A back test that holds above would be even better. And then we'll go test the 30-minute up here. We haven't been there for a few days. Since back on Wednesday. Get above that. Gosh, we haven't been above that since over here. This is what we're looking for. Closes above. Back testing. Struggled. Back tested again. Got that little higher high. Then we went and busted it. Back tested it from bottom and fell out of the bed. So this is the kind of price action we got to watch for right here. You can watch for it on every time frame. Bust above, back test, extension, we got the higher high, then volatility, busted down, back tested from bottom, and went lower. So if you start seeing that right there, you know we're going lower. If you see this right here, you know we're going higher. Like we see this back test. It works on any time frame. Any time frame. That's why I love this line. Love this thing. All right, everybody. I'll be back again on Monday, 9:15. Same bat time, same bat channel. We'll do it all over again. Have a great day. We'll see you on Monday.